It will indeed. So much big news around this morning. Let's bring you back home in Westpac. It is in a world of pain this morning after being hit with the biggest anti-money laundering case in Australia's history. For more, our senior business correspondent Peter Ryan joins us now from Sydney. Peter, it's really hard to work out where to start on this one. Take us through it.
Well, Michael, you talk about hard to get your head around it. When AUSTRAC released this statement yesterday morning, and I saw 23 million counts, and I asked them, what's the potential maximum penalty? And they said, well, $21 million. So I got the old trusty iPad calculator out, 23 million counts by 21 million per count, and I got $483 trillion, which is a mind-boggling number. In theory, that's what this could be worth. So that's the market value of the universe, pretty much. But the only measure that we really have is what the Commonwealth Bank had to pay as a settlement for its own money laundering case, $53,700, and they had to pay $700 million. So it's looking as though Westpac may be up for at least that, possibly more, potentially $1 billion. But if you look at the papers this morning, this is what it's all about. A potential $1 billion fine, the worst possible photo of Brian Hartzer on the front page of the paper. And of course, when Westpac finally put Mr. Hartzer up on a media teleconference call yesterday, I was one of a number of journalists who are asking, well, the buck stops with you. Are you going to resign? But he's standing firm for now. And is that view sustainable, given what we've seen happen with other bank chief executives in the wake of financial misbehaviour? Well, of course, the comparable case of the Commonwealth Bank, it did bring forward the scheduled retirement of the then chief executive Ian Rev, who was under enormous pressure, but the board stuck by him. But the question is, at Westpac, how much did they know? How deep did they know? Brian Hartzer said yesterday that he was personally shocked and appalled when he saw not just the depth of the allegations, but what was happening with these money transfers, and that Westpac's platforms were allegedly, or according to AUSTRAC, used to fund pedophile rings in Southeast Asia and the Philippines. So incredibly disturbing for Westpac. But, you know, big banks have a lot of compliance, checks and balances committees, compliance committees on the Westpac board. Why weren't these irregularities picked up in time? Particularly the red alarms that were ringing from the Commonwealth Bank case, which really badly damaged the reputation of the Commonwealth Bank, and of course was the final straw that prompted the Banking Royal Commission. So many more questions yet to be answered. Peter Ryan in Sydney, thanks for wrapping it up for us this morning. Okay.